Welcome to the Icons of Real Estate podcast, where we interview the top minds, the deal makers, and the innovators shaping the real estate industry. That being said, let's dive right in. Hey, Laura. So welcome to the Icons of Real Estate podcast. Welcome to the show. For those who aren't familiar, can you break down what C-PACE financing actually is, and why it's such a big deal in commercial real estate?
Absolutely. So thank you for having me. CPACE stands for Commercial Property Assessed Clean Energy. It is a form of financing that has now become a go-to tool, not only for developers, but also for lenders. However, it's highly misunderstood. So CPACE pays for improvements to buildings, energy efficiency, water, resiliency. However, you should think of it as essentially, in some places, CPACE also stands for Commercial Property Assessed Capital Expenditure. I think that's a very good description of what it is. Changes that you're making to your building that will either be required by code or allow your building to be more efficient, which ultimately improves value and also reduces your costs. Things that count: your entire building envelope, your curtain wall, windows, doors, and roof, to all of your building systems, your HVAC, your electric, your plumbing, pools, stormwater resiliency, hurricane resiliency in Florida, as well as seismic resiliency that's required up and down the West Coast. And so, as a recovering developer, as I like to say, actually, PACE will cover most of what you're already building, because you have to build it, or you want to build it because you want to build a strong building. And so we can be up to 40% of all of your total project costs when you're building something, as well as be a form of refinance or rescue capital if you've already done the work and you get credit for having spent that money. And the PACE financing can be used to pay down a lender, to blend and extend, or as part of an entirely new recapitalization for a project.
40%
It can also
is a
be used on
lot.
any type of project, any type of real estate, and it's now available in 40 states and counting. So it's really becoming much more of a tool that people are using on a day-to-day basis, or they're considering using in a way they hadn't before, either because they didn't know about it, it wasn't available in their location, or the size and scale of the market wasn't interesting. And now the projects are getting larger, becoming cheaper, and the access to this capital as a tool is much more ubiquitous.
So it seems that, C-PACE covers a lot of things, and it seems to be something that it's still being made aware, right? Obviously, like here, I hope our audience already has a little sprinkle of knowledge of what it is about. But if not, Laura is here on this episode to let us know about every single piece. So tell us from your experience, what first got you interest in C-PACE? Was there a project or like a moment that you realized like how powerful could it be?
That's a great question. It was while I'm one of the early adopters, I was definitely not one of the first. And when I first started hearing about C-PACE, I was very interested in the project. My background, I started my life in leasing when I was in college. I then was a lender at Lehman Brothers, and then spent the majority of my career as a developer of commercial and residential buildings, and then bought a portfolio of them. So I'd sat in every single seat. And it's important because I had never heard of this tool before. It was completely unknown to me. And when I first heard about it, I live in New York City, and I said, property assessed clean energy, where are the solar panels going here? And where are the wind farms? And I'm a big believer also in the importance of sustainability and climate change. But from a developing standpoint and from a capital market standpoint, I'm thinking, how can I use this? And what the light bulb went off for me was, wait a minute, this can be used in so many different ways. It was totally unknown to myself, and the smartest people I asked had no idea about it either. And so having built buildings and understanding what went into it, the light bulb moment was, wait a minute, people are doing these things anyway. You're already putting in a really, really efficient curtain wall. You're already putting in better HVAC because you want to attract the tenants, and you want to reduce, as an owner, you want to reduce your operating expenses. You're already putting in the better plumbing system, and you have to strengthen your building against seismic problems because earthquakes are happening and the code requires it. So for me, the light bulb moment was taking a step back saying, wait a minute, you have this financing that you can use. No one knows about it. It hadn't been available in New York City yet. It's not really what you think the name is. It's not only about clean energy. It very much is part of it, but it's also about just building a normal institutional quality building. And so it's like, wait a minute, you're already doing this. You can get money for something you've already spent. And at the time, it was during COVID and hospitality was really, really challenged. Hotels were closing. It was a really dark time in the hospitality industry, but the buildings themselves were great. And so actually the first project we closed was a project called the Snow Pine Lodge in Alta, Utah. The hotel, the developer did a fantastic job on the hotel, really great, built a great project. They had spent a tremendous amount of money on avalanche protection and resiliency for that, but also really upgraded their hotel in a very effective way. The loan was coming due and the market wasn't where, frankly, it is today or could be or should be at that time. And so as a result, we were able to give them money for funds that they had already spent. They could pay down their lender. They could get themselves more time to stabilize as the market rebounded. And ultimately, it's been a huge success for them. So this was something where they already built to a high level. Now we can give them funds. They could pay down their lender. Their lender could have a little bit more breathing room. They could have more runway, and their hotel could then, they could get more cash flow. And that's exactly what happened. And so from that deal and more, we've done a lot of hospitality. We've also worked in almost every asset class at this point. It was really interesting to me that this could be a tool that could be used for so many things. It could be used as a form of refinance or rescue capital. It could also be, and this is becoming more and more important, help for new construction. And because we are cheaper than most other forms of capital, we can bring down, in this very volatile, very inflationary environment, we can bring down the cost of capital to allow borrowers to get total proceeds that they need to start their project at a price tag that they can afford, which means the project actually can happen. And so it's been kind of this evolution of how the project has changed and how the market has changed in reaction. That's been so interesting and really got me excited that not only can we be a very effective capital market solution, we also can help people build more efficient, more effective buildings. And our view is let's make each building, building by building, each building, building by building, better one building at a time. And let's help developers and lenders be able to fix their capital stacks in a very effective, meaningful way.
Nice. That's awesome. And I mean, it was with that first building, right? I believe that since that building, many buildings have come across that you've used, the C-PACE financing to bring it to life in a more efficient way for everyone. Walk us through the process, from the idea of actually getting a C-PACE deal done. What are the steps involved in terms of qualification, in terms of approval, and in terms of the implementation and even payouts?
So, one of the things that there's a lot of misconceptions about PACE. One, I have to build a net zero passive house building in order to qualify. And the answer is, if you do that, that's fantastic. Most people can't yet. But it doesn't mean that if you haven't done it, you can't qualify. You absolutely will qualify in most places, but there are a lot of elements that count. So people immediately think this isn't going to count for me. I didn't realize that either. Then secondly, that they think it's really complicated. And third, what I didn't mention earlier, we're an assessment. We're not a mortgage. We transfer with the property. So our payment sits senior to the first mortgage. We can never accelerate our outstanding balance. And therefore, we are very passive capital. And people think, oh, well, if you're in this senior position, you must want to get the property. And I said, no, this is not loan to own money. We actually want to help people. And we're very much aligned with both the lender and the borrower in the stack. And so one of the challenges we have is really having people understand what it is and what it isn't. It's not the right product for every project. However, it also is far easier to get. And more lenders are accepting it. And it can be used for a variety of uses. So first things first, you have to, the state has to have opted into it. There's, again, as I mentioned, 40 states and counting. And so the state has to have the program. Now, what we hear a lot is, oh, public to private partnership. Oh my goodness, does the new administration change your ability to access this? The answer is no. It's a great question, but no, it's not that kind of public-private partnership. The public side is the state will opt in, and each local municipality will opt in to the ability to have you pay back the financing through usually your real estate taxes or your tax bill. However, that's the end of it. After that, it is really lender dependent as to what the terms of that financing are. And the capital does not come, it's not a tax break that you get. You can have historical tax credits, you can have real estate tax abatements, residential and commercial. None of that impacts your ability to get PACE financing. You can be a nonprofit that accesses this. You always have a tax bill. So as long as you pay back the lender, Northbridge is a CPACE lender, then you are able to access the financing. And then it's at the borrower's discretion when they want to, take us out or not. They can keep us on, they can sell the property with the PACE financing or not. So first and foremost, it's not about getting government money for this. It's all private credit. We have a partnership with Carlyle for $1 billion. It's been announced to fund these loans, and the money comes through insurance capital. So it's not about government money coming in. Next, each state will have its own regulations. Most states, and there is differentiation between the states, but most states generally can be somewhere between 25 to 35% of the stabilized value of the project. What counts is really state dependent. So that does create a little bit more complexity for people. We say at Northbridge is, let us help you. We will help you from the first conversation all the way through closing. This is what we do day in, day out. We educate you what will count in your project. Yes, the solar panels will count. Yes, your HVAC will count and all the soft costs related to it. No, your FF&E in a hotel might not count in this particular project. In Colorado, you can be or Washington State, a blanket percentage of your total qualifying costs. So it depends on the state as to what counts, but generally a large percentage of new construction, renovation, or what was previously done, if you do it at code or better, will count. And then from there, we can say, listen, we can give you $20 million. We can give you $150 million. That's eligible. We let people know what the amount is. We can give them a term sheet. We will work with the equity, the debt, the broker, the lenders, the lawyers, everyone to educate them. We will sign a term sheet. We go through the normal diligence process. In fact, we can usually rely on the same third-party reports that the other lender in the stack will do. And then the only thing that's done in parallel, and in every project I've worked on has never actually held up a deal, is to get a third-party energy report. We have certain engineers we work with to verify that, yes, there is $50 million of costs, or yes, there's $20 million of costs, or $100 million of costs in this project that we can finance. And then we will give the money, either at close, or we can fund it as needed, like a traditional construction structure as the project's being built. And that's it. And then we work in tandem with the other lender in the stack. Sometimes we're the only lender, and we're passive. And as long as we are being paid, there's nothing that's owed to us. Our structure is known from the moment we close the loan, and we're paid usually once or twice a year, but can be taken out at any point in time. So a lot of flexibility is another thing people don't realize. The amount of structure which can be to people's benefit, as well as the amount of flexibility that is available to borrowers and lenders in terms of how we can structure our deal, depending on the state and the program. I should also mention that if a state has opted into the program, we actually did this with a project, another hotel called the Newport Beachside Hotel in Sunny Isles, Florida. The state of Florida had opted in, and Miami-Dade County had opted into having their own CPACE legislation, but the city of Sunny Isles had not. So we worked with the borrower and we worked with the city to get the legislation approved to allow them to access this financing. And the financing has been instrumental in helping them do a massive, and I'm very proud of the work they're doing, renovation of their project. And that counted for everything from all of their building systems to changing the glass on, and they're upgrading all of their terraces, to the pool area, to the restaurants, to their common areas, to changing out all of their bathrooms. In hotels, tub to shower conversions are also PACE eligible, water savings, as well as the seawall. So there's a lot that counted in that project. And their being able to access this funding was instrumental to enabling them to make the project successful, which it's been for them.
And Laura, everything that you're telling me, it does sound like a disrupt in the real estate market, right? And in all the good things that you're saying makes me feel like everyone would want to get their hands on this, not just developers or the lenders, the investors as well, right? But you're also saying that, and you're sharing that with us, that some of the parts in this are still hesitant, to embrace this alternative financing type. Like, why do you think traditional investors or lenders or developers are so slow to adapt, even with such this easy sell that you're sharing with us?
They don't. It's new, and you can't know what you don't know. People historically throughout business are wary, but frankly, in the real estate industry, real estate's not known for being an early adopter for things, whether technology or new financing. I started my career at Lehman in the early 2000s in Europe, and I worked on Lehman's securitization number 2. And at the time, we were explaining to people what CMBS is. They had never heard of it. There was, disruption in the capital markets at the time. It was a new product for Europe. It had been around in the US and was rapidly gaining traction, but in Europe, it was very early and very, very slow to adapt. And then once people understood how to use it, once there was more understanding on the legal side, on the banking side, borrowers and lenders, that completely changed and acted as people to say, wait a minute, maybe I can use this tool. And then it took off. And ironically, this is something that now the pullback in CMBS has actually enabled borrowers and lenders alike to look at CPACE and consider it as a tool. I think what's also happened and why people have been hesitant is that historically, and it's been around for almost 20 years, but it only surpassed the $10 billion cumulative mark this year. And it wasn't until 2020 that we even hit 3 billion cumulatively since inception. I mean, so there'd been rapid triple-digit year-over-year growth as a couple of things. One, there's been a pullback in the capital markets, so people look for other alternatives. 2, so that the macro economy has acted as a catalyst. 2, more and more states are opting in. New York City, until recently, you couldn't do any projects. And we sit in New York, and we could do much more outside of New York than we could do in New York. Now the regulation has changed in New York for the better to enable us to actually move forward on projects, which we're very excited about. More and more states are now opting in. As I mentioned earlier, more than 40 states are enabling this. And lastly, the cost of the capital and the availability of the capital has changed. Early on, CPACE was really thought of as very expensive money that only people took as the most necessary situation and for a very small amount, $500,000, $2 million. Now, that's very much still part of the industry of PACE, but that's the smaller balance. And we are in the large balance part of this space, which is $10 million and more. And only recently, in the last 2 or 3 years, has a 9-figure deal even been possible. And now that's very much, of course, yes, we can do 100 million. Yes, we can do 150. And yes, also the change has also been the lenders' adoption and understanding of what the product is as they've taken the time to learn, as the pricings come down, as more and more states opt in, as the availability of capital has grown to say, yes, I will consent to CPACE. And we've been fortunate to work with groups ranging from balance sheet lenders like Wells Fargo down through debt funds and other types of alternative lenders. And we also, with our partnership with Carlyle, are able to do a whole stack solution with our partners there. So the market has changed as the market's adopted this willingness to consider it as a new tool. But it does take learning to understand that it's not just for solar panels and wind farms, which are not as readily available in New York City as you'd think, but rather the work that's already being done, the work that's required, is able to be used. And so it's really that kind of change and people taking the time to learn about it and what it is and what it isn't. But it's very easy to access. We are totally passive, and we can really be used as a tool for borrowers and lenders alike.
So, I mean, it will be deal by deal, building by building that you show the power of the CPACE, podcast by podcast, right? And
Yeah.
you mentioned a couple of times about this partnership with the Carlyle Group. I did see it as a press release. $1 billion partnership. That's when there's the big B involved. People look twice. So tell us a little bit about this. Obviously, it wasn't your normal Tuesday. But do you see this as a beginning, or maybe another important milestone of a larger movement toward this private credit and real estate?
I absolutely do. First of all, Carlyle has been exceptional partners, and for us as a company, that's been meaningful because not only did they commit to this $1 billion, but they also made an investment in our operating company, and they've just been wonderful partners in terms of seeing the opportunity. And I think we collectively saw a larger opportunity that others may have missed. And it's really the confluence of the macro environment in CRE, increased volatility, decreased access to capital because of lack of liquidity from banks, and lenders pulling back on CRE due to overexposure from an increase in lending in a zero interest rate environment that, from 08 to 22. The second was an expanded access to CPACE. So not only is it available in these 40 states, but it can also be used up to 40% of the total project cost. And so when people said, wow, congrats on your partnership with Carlyle, how on earth are you going to spend $1 billion in $2 million increments? And I said, I'm not.
Yeah.
That's what PACE was, but what we see is the opportunity of where it can be used. It can be used for new construction, and there's a need to bring down the overall cost of capital again. So the macro forces as to why banks, the lack of liquidity in CRE, and how we can help spur that. And we're working on a number of very large construction projects as well as a result. But also it can be used as a response to the lack of liquidity from the fact that these deals were made in a zero interest rate environment, and that there are near-term maturities with this wall of maturities coming in this year, next year, and the following. So private credit can access differentiated commercial real estate product while simultaneously solving a really important capital markets problem of providing necessary liquidity to take out lenders, to blend down the cost of capital, give money to lenders to reduce their exposure, and give borrowers the runway that's needed to be able to ride out this next wave. Projects were built, took them more expensive than anticipated. So there were cost overruns, there were delays. And because of those factors, and now with a underlying rising interest rate, the project may be complete, but not yet stabilized. And the environment that we are in today was not underwritten when these projects were conceived of 2, 3, 4, 5 years ago. Now you have a great building, which could be in a great location, but a capital markets that's really in flux and not as anticipated. So it can come in also as a bridge alternative to help ease that burden of the new capital markets reality that many of these developers are facing. So it allows the private credit to access these differentiated products. And I think we're going to see far more, and we are seeing it, and just in terms of inbounds that we've received and many of our competitors and colleagues in the industry, just in terms of the interest in this product as it's becoming much more wide scale, larger check sizes, and can be used not only in individual deals, but also across portfolios. And the more and more people see it as a tool on the, to be able to use it as a tool, lenders and borrowers, it allows more product to be there for the capital to come in. And again, as the cost is coming down and the size and scale of the market is, drastically increasing.
Nice. And it's amazing to see you leading the way, and amazing to have you here on the Icons of Real Estate podcast, showing everyone probably this won't be evergreen content, because maybe in 5 years people will look back and it's like, who the hell doesn't know CPACE, right? But if you're hearing it for the first time, don't sleep on it. Usually if someone was invested in $1 billion, I think that's someone that you can trust, right? So we trust Laura and what she has to say. Obviously, how can people learn more, even get into bed with some, CPACE financing for their deals, learn more on how can they apply this to their own business, to their own clients, their own deals, or even find out if their project might qualify? And are you the one that can show them the light?
Yes, we can. So I would say two ways. One, we have a very active LinkedIn account for Northbridge where we try to make people aware of changes. New Jersey, the Garden State program just came online. Texas has just increased their what qualifies in a very positive way, and just highlighting different projects that are being done. And then so follow us on LinkedIn. And then the second way is to come to our website, which is www.northbridgeops.com. And you can contact us there if you have questions or to size a project and to get some more information. We try to keep people as up to date as possible about the ever changing and very rapidly changing positive changes in the CPACE market.
Perfect. Thank you so much, Laura, for coming on the podcast, and I'll see you guys next week.
Thank you so much for having me.
If you enjoyed this episode, make sure to check out our other conversations linked on the video. And if you ever want to be a guest on the show, if you ever want to launch your own podcast, follow the links in the description. We'll be able to help you out. See you on the next one.